Hello everyone, how's it going? In this video, we're going to talk about Rumble. So, there's a lot of interest growing around the stock from retail shareholders, from some institutional as well, but from what I see, it's mostly retail. And it's rare that in this day and age, we still see such an interest gathering around a SPAC, like a company going to public through a SPAC, which gives hype to people. Now, the first reason for this is that the backing is solid. People behind this include Peter Thiel, who is also the man behind PayPal and Palantir. The business model is also very clear. I mean, Rumble is basically a video distribution and also a video streaming platform similar to YouTube and I would say Vimeo. It also has a more clearer and flexible distribution model, meaning you can license your videos to other platforms, um, which makes like monetizing your content far easier. The company has been around for 8 years with a pretty established business presence, and like I said before, the business model is clear. It's a content manager and a licensing partner for retail and business level clients. Now, every time that I take a look at it, it reminds me on first hand of YouTube, but on the second hand, it does remind me a lot more of a website that you guys may know about it called VidMe. It is a bit of a double-edged sword, but although this time I think that the foundations are going to be more solid than VidMe, partially because it is made by actual business people. It has a more like thought through plan to make itself profitable. And it also comes around a time where things started to move. Like there are tectonic shifts in the media landscape, or more likely, like the social media landscape have begun to shift. So there was a time when people mainly rely on the mainstream sources to inform themselves. And nowadays, whether you agree or not with this change, that is, I think that we all agree that this shift has been happening over the past, I would say, 5 or 6 years, to say the very least. It might have been ongoing for well over a decade. I just wasn't old enough to notice it. So there are a lot of people looking to express themselves and are looking for a place where they won't be, demonetized or refused entry or that sort of thing, or deplatformed, right? And this is where, in my opinion, where Rumble comes in. They want to fill this sort of gap. Now, remember before when I talked about like how VidMe was a little bit like this, and this could be a double-edged sword? Well, the double-edged sword is very easy to explain. I mean, first of all, there might be commercial partners who don't want to be involved with Rumble because of this freedom. And also, at the same time, there could be a lot more users coming in because of this freedom at the same time. So, at the end of the day, I think that things will probably balance out in this regard. Now, the main thing with video streaming platforms or video hosting websites is that it's not necessarily the number of users that is always an issue, although it could be. Okay, it could be. So, for example, VidMe might have had an issue with how many people are using the platform, which may have been the reason why ultimately it didn't really succeed, it didn't survive. The same goes with YouTube, the same goes with Twitch. So, from the perspective of outsiders, you can very well say that, oh, well, there's a lot of people on those websites. This should be great. But if you take those numbers and go to like advertisers or ads agencies, maybe these numbers are not so great after all. Because essentially, all the companies that I've just mentioned, they are all losing money. Oh, of course, YouTube might be losing money on a nominal, in a nominal manner, meaning Alphabet is calculating the distribution or the allocation of revenue and expenses in such a way that maybe at the end YouTube doesn't get that much of the profit, but gets a lot of the expenses. So it's possible, right? But there's also a possibility that fundamentally hosting videos for a living might not be such a viable work unless you do it on a, I was going to say artisanal scale, but Vimeo is not exactly artisanal. But what I'm trying to say is, unless you aim a certain niche of the content creators who create contents not necessarily for mass viewing. Like if your platform is not built for mass viewing, then you don't have to incur all those expenses, right? So we shall see. We shall see who are the people. Sorry, not what, but who are the people who will eventually go to watch content on Rumble, and what is going to be the end result of all this. Um, so regarding the social medias or the social platforms or video distributions, I have to say that so far it seems like they are following a very similar route to the mainstream media in the sense that they need to have some sort of patronage behind that company. They need to have some financial backing behind them in order to survive. So, for example, YouTube has the financial backing of Alphabet, of Google. So Google is feeding like ad spots to this entity, and this is how YouTube is keeping everything afloat. And even then, um, it's we can't say that YouTube is flowing in profits, right? It might be flowing in revenue, but profits is another thing. Another example would be Twitch, right? Twitch is very popular. I watch Twitch all the time. But does it mean that Twitch all by itself has been a success? I think not. Otherwise, it wouldn't have been sold to Amazon. I kind of forget how much Amazon paid it for. But in my opinion, it was not a viable business on by itself. So Rumble does have to prove to the shareholders that in the long run, they can carve out a niche in this whole ocean of digital content and to carve out its own path. So, of course, so far things are starting fairly well. I mean, if a company can create such a great gathering of interest in this kind of environment, then things are encouraging for what's going to happen afterwards, right? So this is one thing. The other thing is, of course, Rumble doesn't look like a website that is targeting the mass audience. Okay, I think that Rumble has a more niche, specific type of audience that is geared towards it. People who think that websites such as, the one that you're watching this video right now may not offer them this opportunity to express themselves freely, for example. So ultimately, this is, in my opinion, the current play of this company. In the long run, they do have the possibility of, making massive amounts of money with licensing and with like embedded video players, that kind of stuff, in order to spread the message of their creators. Now, whenever people want to invest into social media, whenever people want to invest into video content platforms or licensors, there's always this lingering question. Yeah, but what about YouTube? Like why people just don't go on YouTube. This is a bit like every time there's a pay-to-play MMORPG, people may ask, yeah, but what about WoW? If you're going to pay for a game, why not just play WoW? At least that was a typical question that people used to ask themselves. And with reason, right? In this case, though, I think that YouTube, if anything, is the reason why companies like Rumble even exist. Because they want to have like a diversification of their content distribution channels. I think that this is the reason behind it. And in that sense, Rumble is actually very smart. And I do hope that it's going to become more successful for its shareholders. Now, what kind of people is it aiming at? This is the kind of like the investors who should be investing into Rumble, they believe that content sharing or video content creation is going to be a profitable niche in the years to come. Now, whether you believe that or not is entirely up to you. I can tell you that from my personal experience, the specific objective of licensing videos or targeting specific niches does have a better chance to succeed compared to websites that are aiming to everybody and anybody. Because in the end, if that's the case, you might be getting nobody, right? So this is one thing. And the other thing is they are comfortable with wild volatilities because this company is in a sector that is likely going to go through a lot of wild volatilities, like way higher than whatever the rest of the market is going through, for the better or worse. So it can jump by 20 to 30%. It can also dip by 20 to 30%. There's no way of telling in which way it's going to go in the short term. What's going to dictate the long term, though, is the intrinsic value that this company can deliver to the rest of the market. Now, in this regard, I do believe that they will succeed in their promises. I do believe that there is an actual gap in the current media landscape or content creation landscape, allowing for a website like Rumble to exist. Okay. With that being said, doesn't mean that they're going to necessarily be a very successful venture. Well, the probability is never at 100%. Going in, you have to understand that, and going in, you also have to understand that it might go to a 50% retracement from here. This should be priced in to your decision of buying Rumble shares or not. So my conclusion is it's overall bullish. Okay, this is overall bullish. I think that if you want to buy it, of course, if you don't want to miss out, buy a small chunk of it now, and then leave like at least 60% of your allocation for the later month. I wouldn't mind buying Rumble over the next 24 months to see if they outlast the initial hype. And the maximum exposure I would recommend is between 2 to 3% of your portfolio. Now, given the current market environment, I believe that the equity market is in a vast phase of correction, especially when it comes to tech and growth type equities. The financial market has been living and breathing thanks to the continuous creation of new capital, with different waves of quantitative easings, which will have consequences on the price of assets as well as their yields. With the interest rates kept relatively low over the years and the increase of amount of capital in circulation, this will keep putting significant pressure on the profit that we can expect in investment products across the board. And this, by the way, is a reality that may shift in the years to come if the interest rate of core infrastructures within our globally financialized system increases. It's useful to remember that the market doesn't represent the real economy, and of course, the real economy doesn't always reflect in the stock performance, since the name of the game here is ultimately called supply and demand, which depends on a whole bunch of factors that go way beyond our own control. If we think about it, this is like saying, if your neighborhood house that is put up for sale is only allowing those who actually want to live inside to buy it, versus if you allow every single type of buyer with different intent or reasons to buy or to sell it. So obviously, there will be a significant difference in the price of this asset for those two scenarios. The market currently works more like the second option, and assuming that it would only reflect the fundamentals of the underlying economy would correspond to the first option. There are a few elements that are considered to be the reasons. The first one is the significant increase of amount of money printed by the central banks around the world, which is then distributed to the banks, with the expectation that they will be loaned to businesses. Normally, that's a good thing, but with a lack of opportunities in the real economy, the significant portion of that money actually went back to the financial system to buy up the price of existing assets. Now that the QEs have been wrapping up or ended around the world, I think that this drive behind asset price may no longer be as relevant as it is right now for the future. It is now compensated by the arrival of capital from one region to another, and from one sector to another even within the same jurisdiction. With the increase of tensions around the world, capital is always looking for a safe haven to park their money into, not just for a place to grow the nominal value, but with a currency that tends to keep its purchasing power as well. The third factor is the creation or the birth of artificial bubbles, either maintained by the market trends built up over the years or out of necessity. Capital needs to find a place to stay. Some good examples of this would include the EV sector in the 2020 and the oil and gas securities when there are tensions around the world. Either way, when it comes to the price trends of the market, the degree of uncertainty is a key drive behind the price fluctuations, and that is likely going to increase as we go on from there. When companies announce that they are going to enter or exit different markets, or that they will be trading on different platforms and exchanges, this can all have significant ramifications on the price of this asset. Some of the considerations to have when operating in this context include having a clear view of what is going on, especially regarding the cash flow and the capital flow, and avoid certain potential pitfalls. One of these is to be careful with short positions. Inherently, short positions are riskier than long positions as the downside of long positions is limited, whereas the short positions can lose you as much money as the stock price may reach, which is infinite. On top of that, we're now seeing a new phenomenon with short squeezes, involving a group of retail traders propping the stock price up, forcing short sellers to recover their positions. Sometimes the attempt will not succeed, but sometimes they end up in very spectacular success. Something else to consider is to treat tech stocks with care. To start, ask questions when the price of a security skyrockets without real fundamentals. It doesn't mean that you shouldn't be touching it with a 10-foot pole, but it does mean that there should be a difference between the decision of long-term holding and short-term trading. Either way, a rule of thumb is that each position should be structured in a way so that their individual performances will never affect the portfolio's stability. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.